Ladies and gentlemen, welcome. This is 4ST441 Statistical Methods and Capital Markets. My name is Šimpach and I will be your teacher during this semester. So, the first important, I would like to introduce myself and I would like to say some important information about me and other important information about this subject and about the structure of this subject. So, I work for the Department of Statistics and Probability at the Faculty of Informatics and Statistics. There is my university email, andre.simpach@vse.cz, and I have office in new building 463. Something important about office hours. I don't know where are you now, maybe abroad, yes, so it will be probably difficult for you arrive to Prague on office hours, because I scheduled the office hours primary at the university in my office. Yes, I will have this semester the office hours from 4 p.m. to 6 p.m. on Thursday, so right after your seminar, yes, but I prefer personal office hours. But if you are abroad and you are not able to arrive to Prague to my office hours, I will be for you available, for example, on email, on this telephone number, or for example in Microsoft Teams we have a chat, so we can manage these issues in this way, yes, but think on this, that I have many of students, a lot of hundreds of students this semester, so it's difficult to communicate with everybody electronically, so think on this. Okay, office hours. There is my personal mobile phone. In the case of urgent questions and wishes, don't be afraid to contact me by phone to avoid unnecessary delay. This is connected with the total number of students which I have this semester. Yes. 200, 300 students. If you check my schedule, you will see that I have 8 seminars of statistical courses this semester. And now something about the structure of this semester and the system of teaching and the system of your education. I will prepare for every week the seminar in advance. Yes, so this seminar will be prepared in advance because I need a screen with projector. I need sometimes a paper for writing formulas. I need to use software, I need to use notebook, etc. And it's very complicated if you sit in front of the computer and you have only very small web camera, yes, and it's difficult to show to you everything and fastly, yes. I need to switch between all the devices. So I will prepare for you the video seminars, original video seminars for every week, yes, which will be broadcasted directly in the time of your seminar, yes, and later I will provide to you the record of these seminars and these records will be uploaded on YouTube platform, and it will be here forever, so you can watch it infinity times, yes, and study the seminar infinity times later, yes? So all materials which you will see here and this video recording will be later available for you for your study. I think that this platform is good and it will be good for you. The COVID-19 pandemic situation is here almost 1 year, so we already passed 2 semesters, and I have some references, yes, about this my system. Many of students like this. I know that somebody was disappointed by this system. Somebody would like to sit in front of the web camera, yes, and say hello and discuss about the weather, for example, but it's not my style. I need to show you something, I need to educate you, so I will prepare these seminars in advance because I would like to teach you something, yes? So this is my proposal. You can accept this and you can continue with study. If you refuse this, you have the right to delete this subject from your schedule. Yeah, so I hope that this will be good for you and you will accept this. Okay, so now about the content of this course. We'll talk about a lot of time series of stock returns, prices, yes, and we will analyze these time series. Quite a lot of research done in this field, and the basic mechanisms of generation of time series of stock returns can be easily understood. And I will talk to you about various specialized statistical and econometrical software, yes, we can use for analyzing these time series, the various statistical and econometrical software. At the end of this lecture, yes, I will show to you one of the software and I will discuss about the others. 90 minutes per week. Every week you will receive one seminar about 90 minutes long. Yes, and this seminar will be divided to 2 parts. Mainly in the first part, I will try to speak about some theory, yes, about some theory, methods, etc. And in the second part, yes, I would like to show you the practical exercises in real software on the real data. Yes, I don't know if these parts will be exactly 45 minutes and 45 minutes, yes, but it will be approximately 1/2 and 1/2, yes? Okay. Topics, yes? You are expecting that I will show to you some statistical methods, yes, which you can use in analyzing of capital markets. So we will start, of course, with elementary characteristics of stock returns, description of stock returns and their stylist facts, characteristics of central tendency, characteristics of measures of variability, characteristics of asymmetry and skewness, distribution graphs, etc. So the basic statistic, yes. I don't know if you already passed the general statistical course at the Prague University of Economics and Business, 4ST601 or 4ST201 statistics, yes, the basic course of statistics, where we can find these basic statistics, measures of central tendency, measures of variability, etc. So we will start with recapitulation of these measures, and I will show to you other a little bit more complicated measures or characteristics of skewness and kurtoses, etc. Yes, because the distribution of the time series will be very important for us, because we will see the distribution and we will know a lot of information how to analyze the particular time series. Autocorrelation in time series of stock returns and the square of stock returns. A lot of time series in the real world, yes. Mainly about stock prices are generated, yes, by some process, yes. And from the literature, yes, we can find the schemes of these processes, yes, and according to information which we can read from the software, from some analysis, yes, we know how to analyze these time series. So we are able to read, to analyze the correlation between the values in the time series, yes, and we can create the models, establish the models, yes. ARIMA models, autoregressive integrated moving averages, yes. The basics, Box-Jenkins methodology is very often used in analysis of time series and analysis of stock returns and stock prices, because according to correlation structure, yes, correlation structure in a particular time series, we are able to create the model, yes. As I already said, we will see some scheme of the structure, correlation structure, and we are able to build the best model, yes, for a particular time series. Autoregressive model, moving average, ARMA, it's a combination, yes, of autoregressive and moving averages, etc. Selection of the model, diagnosis of the model, forecasting. We will select the model, yes, but it's not the end. There is a lot of issues, a lot of things which we must take into account about the diagnosis, yes, of the model, because according to some information, yes, we will create a model, but this model could not be the best one. Yes, we must test a lot of things, a lot of characteristics, a lot of issues. Yes, and after we can say that this model is the best one. Yes, from another models. And after, if we have the good model with good characteristics, tested model, as we can use this model for forecasting. You will see that forecasting is not easy. The forecast is not certain. Yes, you will see the large confidence intervals. It's difficult in general, because if this will not be difficult, everybody will be rich. Yes, because everybody will be able to forecast everything, and buy if he or she wants, or sell if he or she wants, yes, and everybody will be rich. So it's not easy, but you will see. Okay, volatility models. Autoregressive conditional heteroscedasticity model and generalized autoregressive conditional heteroscedasticity models. Because of huge, large squares of differences, because of large volatility in the particular time series, it's not easy to find a good model, and sometimes it's better to create models on the squared values, squared dependent variables, and also squared independent explanatory variables. Yes, so you will also see these types of models. And finally, the technical analysis. Okay, requirements and grading. This is the same. This is the same like in all other subjects. Yes, at the Prague University of Economics and Business, the possible grades are 1, 2, 3, or 4, and the structure of points is written here. Yes, grade 1 you can reach if you have from 90 to 100 points. Grade 2 you can reach if you have from 75 to 89 points. Grade 3 if you have from 60 to 74. I hope that everybody of you will reach at least 60 points, so you will successfully pass this subject 4ST441, Statistical Methods and Capital Markets. Okay, you will be evaluated based on your paper and presentation. Yes, this is written in the syllabus of this course. You can check it in Integrated Study Information System. Yes, that 100% of all evaluation is on this paper and presentation. The paper, as written in English, will have 70% of the grade, and presentation, also English, will have 70% of the grade. So I will speak about this also later, yes, because now at the beginning of the semester we know nothing, yes, about the methods, about the analysis of time series, about the analysis of stock prices and stock returns, etc. So this is just this only small information, yes. The deadline for the paper is the 12th seminar. It's very important. I will create for you the data repository, the data depository in Integrated Study Information System, and I don't know which day, for example, Sunday, yes, it can be Sunday, the midnight, yes, but the 12th seminar, yes, the 12th seminar, for example, Sunday midnight, you will have to upload, yes, to the data depository in INSYS your paper, because in the 13th seminar, there will be a presentation, your presentation of your research, yes, of your seminar work. The paper will follow the methods taught at the seminars and lectures. The structure of the paper will follow the topics of seminars and lectures. will be specific during the semester. Yes, now we are at the beginning, you don't know anything about the methods which will be used. Yes, so I will speak about this seminar work, yes, during all semester. Will be an application of statistical methods to the analysis of time series of stocks. The choice of time series of stock price is up to you, so I will show to you the sources, the data sources, yes, where you can legally download, yes, some historical time series about development of stock prices or stock returns or shares, etc. Yes, so you will select appropriate time series which will satisfy you. Yes, use real data for at least 1 year, 365 observations. You will see that we will analyze a lot of time series which will be with daily frequency. Yes. We have annual data, we have monthly published data, quarterly data, weekly data, yes, or for example daily data, etc. The paper in English should be about 10 to 20 A4 pages. So it will contain, of course, the text, the charts, the tables with statistical tests, evaluation of models, yes, etc. But I will speak about this later because, as I already said, now we are at the beginning of the semester. Structure of the paper, yes. I hope that you already seen some seminar work, some seminar paper. It needs title page, name, study branch, type of the time series which you analyzed. Yes. It will contain elementary statistical analysis and characteristics of the time series of stock returns, autocorrelation in time series of stock returns and square of stock returns, ARIMA model, diagnosis and forecasting, volatility models, gauge, arch, summary, conclusion, resources. Yes, I will speak about this later because you can see that you have here written the methods which we must learn. Yes, we must learn during this semester. The presentation, yes, which will be during our 13th seminar. Yes, 13th seminar. Short and brief description of the results of your analysis. You must prepare the presentation in PowerPoint or other presentation tool. Yes. If you are using OpenOffice, yes, there is different software for presentation. If you are using macOS or Macintosh, you are using different softwares, but software for presentation. Yes, so you will prepare the slides. You will present your paper at a certain seminar. You must be on time, online and on time in Microsoft Teams at a certain seminar. This is very important. Check the calendar, yes, check the calendar and write here that it's absolutely necessary, yes, to be ready, to be prepared and to be available on the time of your 13th seminar. Yes, I will not check, yes, the present of you at my seminars. Yes, I will not check if you are online or not online because later, yes, I will give you the links on YouTube platform where you will have these video seminars. Yeah? So if you have other business, yes, at the time of your seminar, it's not necessary to be online, yes, because I will give to you this material. But I will be available at the computer. There is a chat. Yes, you can ask me on time. Yes, you can ask me during this presentation, and I can respond to you. Yes, but it's not necessary. But on 13th seminar, yes, you must be available. You must be online because you will present your presentation. You must be able to share your presentation in PowerPoint or other presentation software, yes, and you must be able to speak, yes, to microphone. Check your Microsoft Teams settings before the presentation. There will be no time for technical issues, so be ready to present. I don't know right now if I have 7 students, 10 students, 15 students, 20 students. Yes, I don't know, because somebody can take this subject during the first week of the academic semester. Yes? So right now I don't know the final number of all students, yes, but everybody from you, yes, must present in the 13th seminar, on the 13th seminar. Okay, there will be no time for technical issues. I strongly suggest you try the presentation at home in advance in Microsoft Teams. The presentation of your topic should be in English, yes, and approximately from 8 to 10 minutes long. Yes, no longer, because your analysis will not be large, yes, and we must think that we have more students, yes, so everybody must present during the 13th seminar, but detailed information I will send to you later, yes. When I know the total, the final number of students. Pick up and present only the most important results of your work. For example, I suggest you presenting graphs and comment each of them with 2 or 3 sentences. And present conclusions. Yes, it's not necessary to speak in many sentences about the development of the time series and about other non-important issues. Yes, but what is necessary? The model, the evaluation of the model, the forecast. Yes, the main characteristics. And the final results, yes, your final results, the prediction and your final statements. Okay, you have to have written the paper before the presentation. As I already said, the deadline is 12th seminar, and in Integrated Study Information System, you will see later, yes, there will be opened the data depository for uploading this document. You may be asked to discuss the content of your paper with the teacher if some parts of the paper or presentation are not exactly clear, or if any other issues arise. Okay, now something about data sources. I don't know if every week, yes, but sometimes I will send to your school email addresses or to data depository of Microsoft Teams. I will send to you, or I will upload some data for you, download it from some databases. Now I will say to you about some databases, because your duty, later will be also the download some time series, yes, because it will be necessary for your seminar work, for your seminar paper. So now something about data sources. We will work primarily with daily time series of stock returns, of stock price or stock prices. One of these data depository is QuantQuote. QuantQuote historical data up to year 2013. The web page is quantquote.com / historical stock data. So either now or later, yes, you can check these websites, and there you can find the leaf where is written free data. Yes, so we'll use the legal data source with historical data, which are for educational reasons, yes, free for downloading and free for analysis. Yes, so you can check these web pages and you can download this data set to your computers. We will select the stock and we'll go to historical data, where we can download the daily data for selected time period in CSV format, comma separated values. Yes, this is the format which can be opened in Microsoft Excel, other table calculators and other softwares for analysis. Yes, so there you can see this slide, historical data here in the middle. Yes, there is the line with links, and the historical data is here in the middle. Data shows stock returns at open and close, the highest and the lowest price. So you can see 4 columns. Yes, 4 columns: open, high, low, close. Okay. Other data sources. Yes, you can use, for example, Yahoo Finance. Every time it's on web pages, Yahoo finance.yahoo.com / trending tickets, most active, gainers or losers. Yes, you can use filters to find stocks. So not now, but later you can check these pages. Yes, and you can learn about the structure of the presented time series. There are 2 stock exchanges in the Czech Republic. Yes, Prague Stock Exchange, pse.cz/en. It's also in English language, so it's very good for you. These web pages are not only in Czech language but also in English, with 4 markets. You can see market data is here every time, shares and prime market, standard market, free market and start market. When clicking on particular stock, you can find its price and historical data, but they cannot be easily downloaded. Yes, there is no button, yes, which you can use for easy downloading in, for example, Excel format or CSV or some database format. It's necessary to select the data directly in the internet browser and copy and paste. Yes, Ctrl C, Ctrl V. So it's not easy, but it's possible. Yes. It's not easy, but possible. And other Czech Stock Exchange RM system, rmsystem.cz. When clicking on particular stock, you can find its price and trading history. Data can be easily copied and pasted to Excel. So there it's not such difficult like in case of Prague Stock Exchange. There is a little bit easy. This is a little bit easily. Besides, our university has paid database in room new building 40 at home. Yes, you can click on this link and check the details. Yes, but if you are abroad and during this semester, if you are not attend to university, this is not important information for you. Yeah? This is one office, one room where is I don't know how many computers, but in this room, yes, there is prepaid database for education, for students and for teachers, yes, but it's not possible to use, for example, virtual private network or anything. You must be in this room, in this office, yes. Okay, so that's all about data sets and databases. Yes, and now I will say to you some important information about some descriptive statistics which you can use in the evaluation of time series. What is a time series in general? A time series is a series of data points in time, ordered from the past to present, chronological sorted values of particular indicator in time from the past to present. Yes, we have a history, yes, of the particular values. The time series, yes, the time series is a series of values from some random variable. Yes, we can say also this, that it's a series of values generated by some random variable. Statistical description of time series can use classical arithmetic mean for flow time series measured over an interval of time. This classical arithmetical mean x with stripe is calculated like summation of all values, summation of all values in the particular time series divided by the number of observation. Yes, sometimes you can find in denominator n, like sample size. In the time series we are using t. Yes, or it can be weighted version of the mean, where the particular values are weighted by some d, yes, the distance or weight, yes, and it's divided by summation of these weights, yes. Chronological mean is used for stock time series measured at one specific time, represents a quantity existing at that point in time. So there is a simple version of this chronological mean, and there is a weighted version of the chronological mean. What is here? You can find here a summation of moving averages with length 2, yes, because there is first observation and second observation divided by 2 plus second observation plus third observation divided by 2 plus And you can move, summation of a lot of moving averages with the length 2, and this is divided by t minus 1. So number of all observations in your time series minus 1. Yes. So this is the simple version where we have the same length of distances. Yes. Or the weighted version where the distances, the number of days, for example, number of weeks, yes, number of working days, etc. So in general, the distances, yes, are not the same. Yes. So you can see that the moving averages with the length 2, yes, first observation plus second observation divided by 2, second observation plus third observation divided by 2, etc. until observation in time t minus 1 plus observation the last one divided by 2, yes. So all these moving averages are weighted by d, d1, d2, d3, and finally d in time t minus 1, yes. So it's weighted, yes. These moving averages are weighted, and everything is divided by summation of distances, summation of these weights, yes, d1, d2, d3, and the final one is d in time t minus 1, yes. There is not used distance on time t, yes. The last one is t minus 1. Absolute and relative differences of time series. We have absolute differences. We can call these differences, for example, absolute increases or absolute decreases. And it's simple difference of neighborhood values. It's denoted delta like difference, delta of xt, and it's calculated like y in time t minus the value y in time t minus 1. So value in time t minus the previous value. It's very important to note that we are losing one observation. One observation is omitted because we must start calculate on the second position because on the second position is y in time t minus the previous value on the first position. Yes, we mustn't start on the first position because the previous position, the previous values is unknown. Yes, so absolute differences and average absolute difference. Average absolute difference is again very easily calculated like simple difference y in time t, capital T, minus y on the first position. So the last, that's the last observation minus first observation, last observation minus first observation, divided by number of observation minus 1, yes? So last value minus first value divided by number of observation minus 1, average absolute differences. Relative differences, yes? Relative differences can be called coefficients of growth, yes? Or coefficient of increases or decreases, yes, k in time t, and this is calculated like simple ratio y in time t divided by y in time t minus 1. So again there is a ratio to neighborhood values, value in time t and previous value. Again, we must start calculation on the second position, because on the second position we have y in time t divided by value from the first position, yes, first position. We mustn't start with calculation on the first position because previous position is unknown, yes. K with stripe can be called average relative difference or average coefficient of growth, yes, average coefficient of growth, K with stripe. And again, this can be easy calculated like t minus 1 root from the ratio y in time t and y1. So again, last observation divided by first observation in the time series, and from this we can calculate t minus 1 root, yes. There is a difference, last observation and first observation. There is a ratio, last observation and first observation, yes? For the smoothing of time series, it's possible to use moving averages. I already talked about moving averages, yes? Here on this slide, in the case of chronological mean, I called these small parts moving averages, moving average with length 2, yes, where we had the summation of two neighborhood values divided by 2, yes, and we moved, yes, x1 plus x2 divided by 2, x2 plus x3 divided by 2, etc. And there we have also moving averages. We can analyze odd length of time series or even length of time series. What is it, odd length of time series? Odd 3, 5, 7, 9, 11, etc. Yes, and even 2, 4, 6, 8, 10, 12, etc. Yes? So we have here formulas. Yes, you can write to these formulas, for example, to your notes. Yes, and we will use these formulas later. Okay, so enough theory. Now I would like to say to you something about software, which we will use in this semester. Mainly, we will use software eViews. I have already installed a very old version, eViews 8, which I have from the past. So it's old version of this software, but useful, yes. You can, if you want, you can download student version of this software. You can check these web pages, eViews.com, and on top of this page you have here products and pricing. Yes, in this section, products and pricing, you have student version live. So if you click on this button, you can free download, yes, free download of this software. This software in this student licension has a limitation. It's not, for example, possible to save the projects, yes, and some functions are limited, but in our seminars I will show to you how to solve everything without these functions. Yes, there is a lot of ways, how to solve this. So I will show to you different statistical methods. Yes, how to do this. Of course, it's not necessary to use only eViews. You have other options, for example, software Gretel, yes, which is fully free, so you can download Gretel software, the newest version of Gretel, and use this. If you know R Studio, you can work in this R software and other statistical softwares, yes, so this is possible. Okay, so now I will show to you something in EView software, some practical analysis, and for future seminars, for example, you can prepare, download some softwares, yes? So, okay, now I will open EView software which I have installed on my computer, and in your school email addresses you can find two data sets, yes? Two data sets about the development of prices, stock prices. One is for Microsoft and one for company Boeing, yes, aircraft company. These two Microsoft Excel sheets are different, the data sets are different, so we'll open these two data sets in EView software. So, if you see this, you can click on File button, and on the second position there is Open, and everything what is Microsoft Excel is the foreign data set. Yes. So the second leaf here, foreign data as work file. So you can click on foreign data as work file, and in your data depository you can find these downloaded two data sets. One is, for example, this one, data seminar 1B Boeing, and the other one, data seminar 1A Microsoft. So first one, for example, data seminar 1A Microsoft, open. And now you can click on this last button, finish. Yes, this last button, finish, and you will see here work file. Yes. On the next position, we can open the second work file. So again, please click on File, open foreign data as work file. Find here the second data set. The second one, okay, and please click on finish, and you will see here the second work file. Okay, this one is prepared a little bit better. Please, here you can see that the name of the time series is long, so please use right button, and there we have rename, and we will write here, for example, just close price. Yes. Close price. Okay, yes, this will be better. Okay, so what can we see here? For example, in case of Boeing, yes, every time series in this software looks like icon in Microsoft Windows, yes. So, for example, here on the first line there is written range. EView software using a space instead of dash. Yes, so 1 space 504 means from first to observation 404. Yeah? So we have here 504. We have here 504 observations. Okay, so for example, we can select this second work file with Boeing. So we can double click on this icon where is the time series, and you can check this data leaf. It looks like classical Microsoft Excel. There we have the values, and eViews is English-speaking software. So it means that using the dots, yes, instead of commas. Every time when we would like to analyze something, it's good to check, for example, the chart. Yes, the chart, the development of this time series in a simple line and symbol chart. So you can click on view button, and there on the second position you have graph with 3 dots. So please click on this button, and you can see that there is a basic type of charts, and line and symbol is here. Yes? So please, you can click on OK, and you will see the development of this time series. Yes, very important. Now, this time series is not specified here, like for example daily, monthly, quarterly, etc. We have here only observation. Yes, so we know that this is the time series about the development, for example, of stock prices of Boeing company in some units, yes, on this variable. But we know only that we have here observation from 1 to 504. Yes, so we can move this chart on the right side, and we can open the close price. We can open the close price of Microsoft. Yes, you can see here on the top of this work file the start, yes, is from the second day of January of year 2020. Yes, to the 31st day of December. Yes, so from the first working day in January of year 2020 to the last day, yes, of year 2020. 248 observations. It means probably that we have here only working days. Yes, only the working days without weekends. So you can see that eViews is intelligent software. It used, yes, this data variable here. Yes? So here we have only observations from 1 to 504, and here we have the frequencies, the dates. Yes. So again, you can click on View button, graph, and you can use line and symbol chart. Okay, yes, and you can see another development. Yes, this is not good. Yes, you can see that we have here spaces. Yes, eViews wrote for you here irregular. Yes, so it means that on some days, yes, we don't have data. Yes, this is the problem for analysis, and later we have to solve this. Yes. So now I will use this second chart about the development of Boeing. I talked to you about some, for example, descriptive statistics. Yes. So we can check some descriptive statistics this time series. Yes. So please click on View button. There we can find descriptive statistics and tests. And for example, we can select the first button here, histogram and stats, yes, basic statistics. So what's written here? We know that we have 504 observations. Yes, there is calculated classical mean. Yes, so if you remember my formula, which I show to you here, summation of all observation in a time series divided by t. The capital T in our situation is 504. And so this is a classical arithmetical mean. Very important information for you. If we analyze indices, yes, know the prices, stock returns, etc., but indices, yes, the relative numbers, relative values, yes, for calculation of mean, it's necessary to use geometrical mean, yes, but EViews or any other software, yes, doesn't know that analyzed time series is the series of indices, yes, and it's necessary to use geometrical mean, but this mean is classical arithmetical, yes, so the geometrical mean is necessary to calculate manually, yes, for example in Excel or by appropriate command, yes. Median, yes, there is calculated median, there is found maximum and minimum value, standard deviation, the measure of absolute variability. If you calculate the second power of standard deviation, you have variance, yes, and there is the characteristic of skewness and kurtosis. Yes, characteristic of skewness and kurtosis, which is the third and fourth centralized moment. Yes, and according to these statistics, yes, we can see and we can evaluate this distribution. Yes, skewness and kurtosis. Now we return back to this chart, yes. If you remember, I said to you that you can observe here some spaces, yes, and I said to you that it will be later necessary to fix this problem, this issue, yes. Maybe you can see that there is written, yes, that we have 248 observations, observation from the second day of January, and there is written irregular, yes. So I know that when I downloaded this data set, I downloaded the data in working days, yes, 5 days working week, yes. So we can check, please double click on this 248 observations, yes, double click, and you can see here work file structure, and there is written work file structure type dated. So please select this formula, and we will select dated regular frequency, yes, because I know that we have no irregular, but regular frequency, 5 days working week, yes. So dated regular frequency, we will select daily 5-day week, yes. And here we must write start date, yes. So please check, there is written range 1/02/2020, yes. So this will be the start date at sign last, yes, this is alright. So please click on OK. And now you can check this chart and everything is alright, yes. So now we have another data set for comparison. Yeah? So please, we can compare these two time series. You can click on View button, Descriptive Statistics and Tests, and we can select histogram and stats. Yes. Okay, so there is the Boeing. There we have Microsoft, and again, I don't know the units. Yes, now I don't know if this is in dollars and this is in dollars. Yes, it wasn't written, so we just compare these two time series in the statistical way only, no economic way. Yes, so again, calculated the mean, calculated the median, the maximum and minimum value, standard deviation. The second power of standard deviation is the variance, and again skewness and kurtosis. Without the knowledge of units, yes, without the knowledge of units, we have here two distributions. Yes, distribution for Microsoft and distribution for Boeing. Yes, and we can compare on the basis of characteristic of skewness and kurtosis. Yes, we can compare that there is different, yes, skewness and kurtosis in the comparison of the Boeing. Yes, we will use these characteristics later. Now, please, we will return to the work file, so we can close these charts, both two charts. And please click, for example, here to this window. Just click to this window, and we will write some command. Yes. So here I will zoom the font, and we will write the keyword series. Yes, instead we write series space, and we will calculate new time series. We will generate new time series. We will denote this time series, for example, D Boeing. Yeah? So Boeing with letter D at the beginning. D Boeing equal sign without space. D open parenthesis Boeing close parenthesis. Yes, and enter button. Enter button, and you can see that there is generated new time series. What we did? Differences, simple differences. Yes, y in time t minus y in time t minus 1. So you can open this new time series. You can see there is an A not available. Yes, I already said to you that we lost one observation. Yes, so simple differences. So you can click on View button, and we can check the graph, yes, of the development. Classical line and symbol. Okay, yes. Absolute differences. The first differences. You can see that this time series fluctuate around some value, some mean, yes, and this mean is very close to 0, so you can see the oscillation, yes, and the same can be calculated for Microsoft. So again, we must click to this window, yes, and we will write to the command log, series D close price equal sign D, and in parenthesis close price. Yes, close price, and after we must click on enter, and there will be generated new time series. So again, you can we can compare this chart and this chart with differences. View, graph, line and symbol. Okay, perfect. So you can see these two charts. Now we will check the frequencies which we can observe here. In, for example, this chart, please click on View, Graph, and here on the right side, there you can find details, and there is axis borders, and we'll use histogram. Okay. And the same we can do in the case of the second chart, yes? So you can see the histogram of frequencies, histogram of frequencies on this axis. Do you remember on the characteristics of skewness and kurtosis? We will compare these characteristics now, yes? This histogram and this histogram. I would like to say to you that this histogram seems, for me, at least for me, more flat. Yes, more flat. So now we will check this. Please click on View button here. We'll use descriptive statistics and tests and histogram and stats. Yes. And the histogram, which was on y-axis, is now here, yes? Skewness, kurtosis. And now the same here, View, descriptive statistics and tests, histogram and stats. Okay. Can you compare the skewness here and skewness here and kurtosis, mainly the kurtosis? I said that this one is more flat, yes? Kurtosis is lower than here, yes? Can you see this peak, yes? Kurtosis is higher in the case of this chart. Okay, we can calculate another transformation. We can transform the time series, the original time series, to another time series, and we can calculate the relative differences, and we call these relative differences coefficient of growth. Yes. So we can close this chart and we can close this chart, and for example click here to this window and write the command. Again, the keyword series, yes, and we will calculate K, yes, the letter K, close price, yes, close price. This is our name, yes. We can write here almost everything, equal sign, and we will write here close price, yes, close price, divided by, so classical slash, close price, and in parentheses, -1, yes. So this is the log, yes. This will be y in time t divided by y in time t -1. Enter, and you will see that we generated a new time series. So you can double click on this icon. Again, check this, not available, yes. We lost one observation, and there we have relative increases or relative decreases. Yes, you can click on View button, graph, line and symbol, and okay. So again, yes, you can see what is above 1 is increasing, what is below 1 is decreasing, increasing by 4%, 8%, 12%, yes, etc. What is below 1, it decreased by 4%, 8%, etc. Yes, so relative increases and decreases. And the same we can calculate here, so click here, click here to this window, and we will calculate k, like coefficients of growth, k Boeing equals sign, and there will be Boeing, yes, the original data set, divided by Boeing in time t minus 1. And after enter, and you will see again the coefficients of growth here. So again, view, graph, and we'll check the line and symbol chart. As you can see that higher volatility of this or variability of these coefficients of growth are at the beginning, and after, yes, these coefficients are smaller and smaller. Yes, okay. Okay, do you know what is it? One-way tabulation, or in statistics we can call this descriptive statistic in table form. We talked about distribution of frequencies. I showed to you histogram and the statistics, yes. We can try to click on view button here, and there is one-way tabulation, the first, second, third, fourth position. Click on one-way tabulation, and we can assemble the frequency distribution table. No only frequency distribution table, but interval frequency distribution table. And that is very important, this field, maximum number of bins, maximum number of intervals, yes. If your software will optimize the number of bins, number of intervals, very often I will write here value 10, and I will let on eViews the optimization of the total number. So right here, maximum number of bits 10, and you can click on OK, and you will see classical frequency distribution table, and we will compare this table with another table here. So again, please click on view button, one-way tabulation, maximum number of bins, we will select 10, yes, and OK. Okay, you can see 1, 2, 3, 4, 5 intervals. 1, 2, 3, 4, 5, 6, 7, 8, 9 intervals. Yes, there is probably a little bit higher variability. Yes, and probably, yes, I think that again, in the case of this chart, yes, the distribution was more flat. Yes, and this is the reason why we have here also bigger number of categories, intervals, bins. Yes, what does it count? Absolute frequencies. Yes, absolute frequencies. Percent, it means relative frequencies, but multiplied by 100. Yes, in statistic we are using relative frequencies without multiplication by 100, but here you have this in percent. Yes, there is the percentage. And cumulative count, what is it? It's cumulative absolute frequencies, cumulation of absolute frequencies, yes. On the last row in the column of cumulative absolute frequencies, you have the sample size, 503 observation, and finally cumulative percent, cumulative relative frequencies in percent, multiplied by 100. What it means, on the last row of this column of cumulative relative frequencies, you can find 100%, yes? Nothing missing in your statistical sample. Okay, so I think that this is enough for today. you have to download some software, yes, either eViews or Gretel or RStudio or something, and you must practice, yes, practice at home. So you have a presentation from me, you have the data set, yes, and on the YouTube platform you will have available this video seminar for your purposes forever, yes. So this is the end from me today. I hope that everything is alright, yes, everything was clear, and I hope that I will see you next week on another seminar number 2, yes. Okay, so this is just the beginning. I hope that this platform for your education will be good for you. And this is the last information from me. So thank you for your attention. Have a nice day and bye bye.